More now on our top story. President Donald Trump's ban on U.S. investment in companies linked to the Chinese military. Well, an executive order singles out 31 companies. But given Beijing's centrally planned economy, almost every sector is tied to the military. And for a closer look, we are joined by Dr. Li Nan from the National University, Singapore. Well, Dr. Li, the 31 companies were designated by the Pentagon as affiliated to the PLA earlier this year. What do you make of this list?
It's a pretty extensive list. It's part of the U.S. effort to decouple from China, particularly in terms of critical technologies that may affect China's military modernization. I think that's my interpretation. Except, to tell the truth, if you analyze China's traditional defense industrial sectors, they're probably not going to be affected. For instance, China's defense industrial sectors include traditional conglomerates that make major weapon systems. For instance, combat aircraft, naval ships, and conventional arms like artillery, tanks, and so on and so forth. Also, military electronics, for radar, for different types of sensor, communication equipment, and so forth. These sectors are not going to be affected by these sanctions simply because they are very insulated. They are not as much, leveraging U.S. capital market. They are very much financed by China's booming defense budget. China's defense budget is pretty extensive. It's as big as a third of the U.S. defense budget. So this defense budget can sustain these in traditional military industrial sectors in China. So except for some joint ventures, for instance, the aviation industry corporation.
Dr. Li, is it possible for U.S. firms and individuals to actually invest in Chinese firms that are not affiliated to the PLA?
Of course, you have Chinese companies that, sell stocks in the U.S. stock market, So those opportunities where U.S., investors can, put their money in, including pension funds and mutual funds and so forth, except for those who are linked to the Chinese military. This is where, things gets a little bit tricky. For instance, a lot of because I just talked about the traditional defense industry, which is very insulated. So that's not an issue. The issue is, China's defense technologies are moving into a different direction. For instance, China promotes this military-civilian fusion strategy to develop its critical technologies in defense, and this is where things become a little bit complex, simply because, a lot of state-owned enterprises and private enterprises, they're not as much involved traditionally in defense industry. Now they can enter the defense market, basically to sell their products, their technologies, their know-how, and they would contribute to build up of the Chinese defense industry. Yes, yeah. So that's where those are civilian industries. They are not traditional defense industrial sectors, but they are moving into the defense sector simply because China promotes this military civilian fusion approach, which really opens
and
up the
Dr.
defense
Li,
market.
I got to ask you too. What are the implications of this decoupling of U.S. financial markets from China? You think?
As I mentioned, this sort of sanctions or decoupling is not going to have a lot of impact on the traditional defense sector. It's going to have a lot of impact on, particularly on sort of making it very difficult for China to continue this military-civilian fusion policy, particularly to open up the defense sector to the critical particularly those companies that specialize in the so-called disruptive technologies, for instance, artificial intelligence, autonomous robotic systems, hypersonics, steels materials, and so forth. These are areas where companies they try to develop technologies that are dual use. Dual use meaning both civilian and military applications. These are the companies that are going to be affected by the sanctions. Yes.